Hello everyone and welcome to Thrive Labs, the place to learn all about technical analysis and the financial markets. I'm your host Mike Williams, and today we're going to be talking about Bitcoin seasonality during its halving years. So as we are hitting key resistance levels over here, as you can see, being the global golden pocket, I know emotions are running high on Bitcoin right now. And as we are experiencing what many consider one of the most important weeks on Bitcoin since its inception, especially with the volatility we've seen over the last week. But what is keeping me calm and collected amidst the bipolar nature that crypto tends to have around these events is the reminder that in every single one of the last 3 halving years of Bitcoin, we have always seen a correction in Q1 of the year, with the average correction to be about 30% to the downside. This is not exclusive to Bitcoin alone, as this tends to be a common occurrence in the S&P 500 as well in the election years, which of course line up perfectly with the Bitcoin halving years. And as we can see in this chart, we can observe a very common seasonal cycle during election years on the S&P 500 over the last 70 years worth of data, which gives us a correction in Q1, an expansion in Q2, another correction in Q3, only to end off the year with another expansion into the new year. Bitcoin performs very similarly and is also susceptible to seasonal cycles, aligning itself with the S&P 500. For everyone that says that the S&P 500 is not correlated to Bitcoin and it does not matter what the S&P is doing because it's following its own cycle and it's a decorrelated asset, let's look at the price action Bitcoin has seen in every year of its halving. Starting with 2012, where we started off the year with a corrective piece of price action, only to have an expansion in Q2, a correction in Q3, and then another expansion, a correction in Q3, and another expansion in Q4, leading us into the new bull market, followed by the year thereafter, only to have the next election year, which was in 2016, starting off with Q1 being corrective, an expansion in Q2, a corrective piece of price action in Q3, and then once again we see an expansion in Q3, leading us into the next bull market of the year thereafter. And for the exact same thing to happen in 2020, where we started off the quarter initially with a rise, but ultimately turned very corrective, pairing up with a black swan event, but nonetheless saw in Q2 a really nice recovery and an expansion of price, only to keep on correcting during its halving period over the third quarter, before followed up by another expansion, leading us into the next year and into the new bull market that I'm sure by now you are all very familiar with. And this shows us that this seasonality is very common for every single one of Bitcoin's halving years, and it perfectly aligns with how the S&P 500 has performed during its election years over the last 70 years worth of data seen here. And this is why I'm saying that while on the local time frames the correlation might be less evident, Bitcoin is not decorrelated from the S&P at all. Bitcoin follows the S&P to the upside, Bitcoin follows it to the downside. They sell off together, they have black swans together, they take off in bull markets together, and they sell off in bear markets together. And yes, the ETF narrative has helped Bitcoin quite a bit, and I'm not saying that the ETF anticipation has not mattered at all in the price increase, but this picture paints a holistic view, and this data proves that correlation between the two, and I think we will continue to do so, and Bitcoin will follow the S&P 500, as financial markets tend to be cyclical in nature anyway. And even if we put seasonality aside, a correction on Bitcoin would make a lot of sense here, as we had a brilliant end of the year rally in 2023, and we have a perfect potential sell the news catalyst opportunity here, right here in Q1, that one being the ETF news. It would make a lot of sense to see a correction as we head into the 2024 first quarter. Now, for me, the news doesn't matter so much because I am a technical trader and we are here at one of the biggest resistances on the Bitcoin chart. And if you have been following this channel for a while, then you are already very well aware of all the confluences given us by technical analysis has been given to us here. We are now at this region where it is of utmost significance, and it simply just would make a lot of sense for us to see a correction, especially because of the simple reason that investors are taking profits after seeing a near 100% increase on Bitcoin in Q3 and Q4, coming off of the September lows straight into the most recent highs, coming into that 100% increase over here. And if we correlate, let's say, the 2019 bear market rally, we cannot ignore the fact that we are coming here simply just into that really important resistance. That one of those confluences that are here right now is the golden pocket. Now, keep in mind, though, I do have to mention, I am not overly bearish on Bitcoin just yet, as that would require a loss of price structure. But as I see the opportunity, and as I see the industry and the news articles with nothing but bullish news and how much capital will flow into the markets upon ETF approval, it is just important to also paint a different picture to prepare for this event, which is backed up by data and facts rather than greed and ungrounded optimism. In the end, I am a trader and I trade the market both ways. Therefore, I want to be prepared for a bullish scenario and I want to be prepared for a bearish scenario so that I can go short if I see the signs of a proper rejection, and I can stay in my swing longs if price does continue up, and that allows me to keep my cool, to keep my expectations level-headed and data-driven rather than what I want to happen from the market. And on top of everything, having seen such a rise in the crypto market, I find it currently very risky to enter into any new bullish positions before a correction ensues, which is the reason why I am simply prepared for both scenarios. I have locked in profits for my swing trades that I have been in since the $20,000 to $27,000 range, which in turn allows me, like I said before, to keep my expectations in check and trade the market both ways if and when that opportunity comes. But more importantly, this paints a nice roadmap that helps navigating the markets when taking seasonality into account. I can now utilize my trading strategies accordingly, reminding myself of the seasonal and cyclical nature of the market. So what do you think? Are the institutions going to save us? Are billions and billions going to flow into these ETFs and send the market significantly higher? Does seasonality not matter? And will this quarter be very bullish? You guys by now definitely know what I think and how I've prepared myself for the upcoming period. And because I get asked quite often, how do I find these levels and how do I use these technical tools to perform my analysis, we have our trading community. You can join that community and I will be very pleased to coach you directly and teach you everything that I know and how to apply it in practice. You can find our website in the YouTube description right below this video. And with that, I wish you a pleasant and well-informed journey as we are leading into a very interesting year to come. Take care and goodbye.